So nuclear weapons have taught us about the negative feedback loop of mutually assured destruction. If one attacks, we all die, basically. And I think by BlackRock, which is a US juggernaut or US, it's very close to the US government and the way that US is run. Um, I think that they're creating a positive feedback loop, which is the opposite of a mutually assured destruction. What they're trying to say is the fact that whoever has most Bitcoin wins. And if this kind of competition starts in the next couple of years, then you're going to see every single nation state trying to accumulate as much Bitcoin as possible.
This episode is sponsored by Skale. Scale has differentiated itself from other layer 1s by offering users a network of gas-free, interoperable EVML1s where the user experience comes first. Explore the gas-free ecosystem at scale.space/ecosystem and follow their journey on X at Scale Network. To learn more about the gas-free architecture and growth of the Scale ecosystem, visit the Scale Research Hub at scale.space/research. Hey everyone, today's episode is sponsored by Glif. Glif is Filecoin's foundational DeFi primitive, enabling Filecoin holders to earn rewards on their Phil tokens by lending them to a diverse pool of Filecoin miners. Got Phil? Deposit it with Filecoin's first and most popular DeFi protocol by visiting glyph.io today. Chaos Labs, the leading on-chain risk management firm, recently launched its new flagship Oracle product, Edge. Edge delivers integrated, high-precision risk and price data for any application with a market. Follow and reach out to Chaos Labs on X to learn more.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed. What's up, guys? Welcome back to 0x Research. Today I'm joined by Roland from Mechanism Capital and Matt from Intuition. Guys, before we get started, maybe you want to give a little introduction on yourselves and what you guys do at your respective jobs.
Why don't you go first, Roland?
Sure, I can go first. Thank you for having us, Boccaccio. It's delightful to be here alongside a good friend, actually two good friends. One of them is a attendee, and one of them is the host. So I appreciate you having us. As you have introduced me, I work at Mechanism Capital in the investment team. Maybe just a brief couple of words about Mechanism. It's what I call a crypto native fund created by the natives for the natives. It was founded in 2020 by Andrew Kang and a number of other crypto native founding partners. Mark Weinstein is the lead of the VC arm. Myself, I help Mark and the rest of the team on the VC arm throughout the whole investment process, from sourcing, diligence, investments, and advisory. Mechanism Capital started with a focus in DeFi in early days. In 2020, the first public investment thesis was on Yearn Finance. And actually, a bit of a fun fact, the name Mechanism comes from token mechanisms and go-to-market mechanisms. And this is what we have been historically known to be very helpful with. And yeah, I've been working with them for the last 6 months. And yeah, maybe Matt can say a couple of words about himself.
Yeah, I bought synthetics early in DeFi because of one of Andrew Kang's write-up memos that he was sending around. So thank you for that, Andrew. Yeah, my name is Matt. I head up business development and strategy over at Intuition Systems. I've been in this space full time since pretty much the end of 2016. Ran a crypto hedge fund for I think 5-ish years before going full time over at Intuition, which was actually a portco before I made the jump to the building side. And for those who haven't heard the Intuition Systems 0x Research podcast, I highly suggest it. That was like one of the most fun conversations I've had. But zooming out, Intuition Systems is building the semantic web, a open permissionless knowledge graph and social graph that allows this folksonomy approach to how we sort of store, organize, access, query knowledge and data. And in my opinion, is one of the foundational building blocks of what will be the decentralized web, or what is becoming the decentralized web. And I kind of just recently rewatched Silicon Valley for like the third time. And I was like, oh man, I feel like we might actually be reliving the show right now. So go listen to that podcast to learn more. But yeah, thanks for having us on, Boccaccio.
Fantastic. Matt, what's it been like to go from the investment side to this is your first cycle building, I assume. And the past few cycles you were on the investment side. What's that been like?
It's interesting because on the investment side, you, or at least from my experience, you kind of spend your time doing your best to dump down, right? You're trying to figure out like where the dollars are going to flow. And as the cycle heats up, the capital allocators become less and less sophisticated. So the act of allocating capital becomes this like cyclical game of figuring out when fundamentals are most important, when momentum's most important, etc. The building side also has this like interesting dichotomy where you're trying to build really, really important foundational technology, but you also need people to want to interact with it. So I would say like what I'm enjoying the most right now is trying to solve that puzzle between having like a core foundational piece of technology and then getting a market that's like obsessed with memes and AI to like want to come do things and to want to come like put in knowledge and interact with knowledge and like have a presence there. And like that is the current, my brain is currently maxed out at like 100% thinking about that problem right now.
That makes sense. And I guess something slightly related. You guys have both been in the space for much, much longer than I have. How do you think it's changed throughout the past few cycles? And because, like you said, memes and AI is really the big thing right now. But was it always like that in your experience?
I just remember in 2017 days, once a protocol had a new website upgrade, or when they were attending some conference and they got some sort of news, the price would have jumped 50% or 100%. That no longer is the case today, unfortunately, because I could push out many website updates if that was the case. But overall, the long term trend is that the industry participants are getting more and more sophisticated. Um, the fundamentals of protocols are no longer website upgrades, but they're rather financial models, and they're getting a lot closer towards how TradFi values things. And yes, of course, momentum and narrative is always important, and oftentimes in the late stages of a bull market, momentum is the most important aspect. But overall, the market participants are getting smarter on all different levels across the spectrum. So you have on one spectrum, on one end of the spectrum, you have, let's say, institutional capital, which mainly is probably seen in Bitcoin, Ethereum, and Solana, who has learned about the cycles, who has learned about the halving, whether or not is it's still relevant. That's another point. They have learned about how Bitcoin works and whatnot, and they are taking a more educated stance to approach this industry. And on the other side, you have, let's say, TikTokers or Zoomers who will no longer allow themselves to be rugged by NFTs. So, like, there are certain tokens that you won't even be able to pitch to someone on TikTok anymore because they know that it's not it. So, I think that by having more and more people joining the space across the years, a number of them every single bear cycle have remained. I remained in the 2018 bear cycle after joining the industry in 2016. And you have, let's say, smart money. Actually, all money is getting smarter, not only smart money.
Yeah, I think that's a good point. Matt, do you have anything you want to add?
Yeah, I do actually. So I think like 2018 and 2019, I spent probably at least 50% of my time like reading and writing about US bond market, treasury market, like fiat currency debasement, like scarcity, the history of money going back to coinage, medium of exchange, etc. And there was this really big academic approach to Bitcoin, or maybe the better way to phrase it would be this intellectual approach to Bitcoin. And we got a lot of like the early on-chain indicators, and that was sort of always destined to be adopted by like the global financial system, and like everyone had this vision, and eventually that happened. And I think all of those things that were being written about, I mean, predating 2018, but that's sort of when I started paying attention, ended up happening. And the biggest change that I've seen in the market between, I'd say, 2020 and now is that there's very little intellectual mind share by outside of a very small niche for the implications of decentralized computation. So like no one is really in a big way championing outside of like Vitalik and like I think ETH actually like people listen. I have been bearish ETH on the ETH BTC pair, and I think trading meme coins on Solana is a way better experience. But like I'm not bearish like the Ethereum ecosystem. Like still the smartest people in crypto are there building new innovative ideas. But it's really insular at the moment, and there's not a lot of intellectual thinking around decentralized computation and its implications on the world. I think that's probably I think we understand why that has become that way, but that's the biggest shift. I'd love to see more of that, quite frankly. But I also have a ton of fun in the trenches, like as an individual. So like where attention goes, money flows, I think is a saying, and like definitely, I have way more fun like browsing what I call meme Twitter than I do like crypto Twitter.
I think that makes sense. Do you see there being a chance that Ethereum succeeds, but the ETH token does not succeed?
Probably not.
Maybe just to add to Matt's point, I think that crypto is a bunch of very courageous and forward-thinking people that just so happen to be right. And I think crypto as an industry has the ability to foreshadow future trends that may occur in the next decade or so, one of which Matt just mentioned. Back in 2018, if you would have told anyone that Bitcoin would have been adopted by BlackRock and institutions will be buying in and the ETF inflows will be 1 billion, or let alone that we will have an ETF, they would have said you're crazy. Like you're absolutely crazy. Like you're a lunatic. And I think that the trends that are emerging now on the utility side should definitely be taken a look at, especially on the AI x crypto side, because what crypto brings to AI is verifiability, which AI doesn't have intrinsically. And these trends may not necessarily pan out over the next 6 to 12 months, but they're definitely very strong trends to look at over the next 5 to 10 years.
Perfect. I want to ask two things on that line. First of all, do you think that BlackRock adopting Bitcoin bastardizes the Bitcoin mission a little bit to become sovereign money, or do you think it's fine that we're letting the bankers take coins in?
Do you want to be right or you want to make money?
That's fair. Good point.
I mean, BlackRock is not creating friction to buying and custodying your own Bitcoin, right? Like
Right.
that's not illegal. So if the market says they're happy, yeah, right. But so if the market says that, like, yeah, we're happy to pour billions of dollars in and you guys hold it, then no, they're not bastardizing Bitcoin. Maybe that value proposition of Bitcoin either hasn't hit its major inflection point or is not as valuable as we thought it would be because, like, we built up trusted institutions over like thousands of years of like civil society, and like you can kind of get into a deep rabbit hole there where like we're getting better at building larger and larger and more stable and stable societies, or you can get into a rabbit hole where like on 150 year debt cycles, like things boom and bust. And like, as long as there's freedom of choice, then Bitcoin's not bastardized, in my opinion.
I also want to add to that. So nuclear weapons have taught us about the negative feedback loop of mutually assured destruction. If one attacks, we all die, basically. And I think by BlackRock, which is a US, I'm not sure, I have to choose the right words. Let's say
Juggernaut.
Yeah, US juggernaut or US. It's very close to the US government and the way that US is run. I think that they're creating a positive feedback loop, which is the opposite of a mutually assured destruction. What they're trying to say is the fact that whoever has most Bitcoin wins. And if this kind of competition starts in the next couple of years, then you're going to see every single nation state trying to accumulate as much Bitcoin as possible. And that will be exciting.
Yeah, I definitely think so. I've been reading this book about pre-World War I banking, and it's like people really, like sovereign nations wanted to hoard gold because that's what it was backed by. And that's basically been the role in what you've been mentioning is if a world like that comes for Bitcoin.
Hey everyone, we'd like to give a special shout out to the sponsors of today's episode, Skale. Skale is built different. Unlike other layer ones, Skale is offering users a network of gas-free, interoperable EVM L1s where user experience comes first. Skale operates like the AWS infrastructure model where developers pay for space in the network in SKL tokens to validators. Essentially, Skale has chain fees and not gas fees. This allows for free transactions on Scale and has saved 46 million users over $9 billion in gas fees. Explore the gas-free ecosystem at scale.space/ecosystem and follow their journey on X at Scale Network. Visit the Scale Research Hub to learn more about the gas-free architecture and growth of the ecosystem. That's scale.space/research.
One more thing you mentioned is AI x crypto, which I think everybody really cares about, but there's a million things under it. So one is compute, decentralized compute. The other is data, grass. We have incentivizing structures like BitTensor as well. What are you guys specifically looking forward to in AI x crypto?
This sounds like just a shameless shill, but I think the fact that I've decided to spend all my time there probably speaks more than the shill. The interaction layer between monetary value and information, I think, is like the most fascinating thing in the world right now. Like we have a sense that AI will continue to advance, and like that has implications everywhere. But we know AI needs its own payment rails. But like that's kind of a half-baked idea, and anybody can come to that conclusion. It's like a payment rails for what? And it's like, oh, a payment rails to transact on a user's behalf. It's like, no, that's not an AI native feature. Like that's a feature for a human end user. What AIs need natively is the ability to like read, write, and monetarily transact with information, as well as like how do you start to think about IP rights with AI? Like how do you start to begin to monetize information, and then how do you kind of start to reward trustworthy information or information that aligns with like the shared societal reality? And what I mean by that is like society can be delusional. Like we had the Blair Witch projects, right? Like the society kind of as a whole decides like what is and isn't going to be considered true at a time and place. So like you need to be able to not just like verify information and not just transact using AIs, but like kind of have some amount of audibility and some amount of ownership and equity in the information being read, in the information being written, and in the transaction of value on top of that, because like that's what AIs are doing. That's the AI economy. So like that's why I get super excited with intuition. But then the other side that I think is extremely exciting is the entertainment factor, which we're seeing with AI meme coins right now. Like these things are online 24/7, generating video content, photo content, music content, cheeky comment. It will roast you. Like it's just there 24/7, better than any AI entertainer could be. And there's a certain novelty to that, and there's a certain amount of intrigue and knowing that it's like not a human on the other side. And like that's really cool because there's two sides of that dumbbell, right? There's like the core hardcore technological fundamental of like this is what AI will become, this is what it needs, and like this is what it is today, and let's have some fun. And that kind of goes back to what I said I was focused on earlier, which is like how does one think about like merging these worlds and like what does that trend look like over time? But that was a lot of talking. What do you think, Roland?
I think I agree, but like from the investment side, because I think I've looked at like dozens, if not hundreds, of AI agent deals. It seems like many founders are hopping on the bandwagon and doing AI. First of all, I think that founders that hop on a bandwagon are not very investable. You want founders that have been on this trend for years to come, and they were like working their whole lives towards it, and now it's like their time to shine. And second of all, I just think Matt's points are excellent. And from the investment side, I think that I have multiple views actually. I think that on the AI meme coin side, we're seeing a bit of a DeFi summer kind of season. And I think that the AI meme coins are not meme coins at all, but rather they are analyzed in a very fundamental way. Because once you implement an AI, then you can actually fundamentally compare its capabilities to other AIs. What is the dev doing? Is the dev communicating? It's not just like a CTO community with a bunch of friends running a token up. It's intrinsically very, very different. And I think that we will have AI meme token mania, or it's already happening, and I think it will continue. But I also think that you also have lots of unknown unknowns with these tokens, because the actual dev and the tech actually matters in this case. It's not just a cute photo or just an NFT. That's on the AI meme coin side. On the investment side, and private markets for AI agents and whatnot, I think that the big question is the demand question. We have shown that crypto is a wonderful incentivization mechanism that brings people on board, but you're essentially renting their time. Whether you're renting it for 1 day or 1 year or 5 years, it depends on how you incentivize them. But many of these tokens have not yet figured out their demand side in terms of what you do with the data, who's the buyer of the data, in case you're, for example, like a deep in AI or whatnot, or why would anyone be incentivized to buy the token on the liquid markets? Because even if it's a cool concept, you want to be interlinked with crypto native tokenomics in such a way to create long-term sustainable, I would say, price action.
That's a good point. And I kind of want to talk a little bit about that. Start of the year, or maybe a few months ago, we had a huge discussion. Like, I feel like everybody just wouldn't stop talking about how there was disparity between public and private markets, and how that was leading to people not wanting to buy the token. And if you launch a 4 bill, no one's gonna buy it, is what most people were claiming. We've kind of seen that that's not necessarily the case. Like, a lot of high FTV, what I would say is like overvalued compared to maybe competitors, have been doing quite well. So I guess the question is, and to both of you guys, what is, like, do you guys think there's been a meaningful shift from those launches and now we're like at better, um, I guess, like valuations, or do you see that changing over the next few months as well? Yeah.
I think the fastest way to lose money in crypto is to think that narratives lead to price and that price doesn't lead to narrative. I think a much better framing for crypto and the way to think about crypto, if you want to succeed, is to just think about flows, right? Are there more buyers or sellers? And that kind of sounds just like a smart ass thing to say, but post FTX, like crypto that was the deadest I've ever seen it. Like the bodies hit the floor and everybody got swept out. And it wasn't until until the ETF approval and then the Trump win, until that really started to shift significantly. So quite frankly, I just don't think there were enough buyers to buy cool new innovative technology. And there were a lot of sellers. There were VCs unlocking with a decent amount of uncertainty, probably some nervous investors, probably some overhang withdrawals. And like there was just a general sell pressure greater than the buy pressure. And then what happens is the cycle takes off. Bitcoin's at new highs, retail's coming in, there's all these manias coming. And guess what I'm going to do if I have 70% of my bag left and I'm a VC? I'm going to stop selling. And everyone's going to stop selling. And now all of a sudden that quote unquote high FTV down only, no one's going to buy this token because VCs just dump on you. Guess what? No one's dumping anymore and nobody owns the thing. And the exact same dynamics that go down go up. And it's hand over fist buying with no material sellers until the cycle's hot. Plus, it's listed everywhere. It's liquid. It has good market makers. You can get leverage on it. And it's real technology. And the FDVs tend to be memes, generally speaking, and we're still in this like pre-product market fit, pre-adoption phase, probably coming towards the ends of that, where you can get away with high FDVs in this market because it's just like still a bit detached from reality, and that's just the fact, right? So I think it is changing. I think people who are interested in core technology and want to take that approach and who want to buy those coins, like congratulations on getting to the perfect entry for that.
I mean, as a general rule of thumb, I would say that inflation and unlocks tend to not matter in bull runs. I would say tend because it doesn't apply to 100% of the tokens. I don't want someone to tell me that, my token had a 20% unlock and it dumped. But typically, when you look at all the tokens that went up massively in 2021 and also now, if you focus too much on unlocks, I think you're losing out and you're missing the bigger picture. However, in the bear market, that's completely different. You'll get destroyed by unlocks.
That's right. That's a good point. And it's something that I feel like people haven't been saying that much. Like now, I feel like we're getting to the point where everybody's parroting the high FTV, like these are worthless tokens narrative. And I agree with you, Matt. I'm not sure if it's. I think it was relevant a few months ago. I'm not sure if it's as relevant as it was back then.
Well, like some of these tokens actually have great tech. To Matt's point, like Sui, Sui has amazing tech, and it doesn't come close to some other blockchains out there. And actually, a member of our team has been really bullish on it for the last couple of months. Shout out to Ken. Um, so you don't have to discount a token just because it's high FTV, and you actually have to look a bit deeper. And oftentimes, the saltiest people are the ones who don't have bags and see a token ripping 100% in their face, and they're a bit angry. I mean, I get angry too. So
If you're high FTV at the beginning of a global liquidity crisis, at the beginning of a global liquidity cycle, like the time to point and be like, oh, the FTV is too high, it's gonna nuke, your timing's just off. Like you can be right for years and years and years, but the time to like take that position financially is probably closer to the top of a global liquidity cycle. So it's just like people kind of lose the plot. They get too zoomed in. They're literally on 1 hour, 5-minute, 15-minute charts. They're like on Telegram 15 hours a day, and they don't step back just to like use their brain for having an original thought. And I think when everyone around you is saying the exact same thing in crypto, just literally do the opposite, and you'll win more times than you lose.
Chaos Labs, the leading on-chain risk management firm, recently launched its new flagship Oracle product, Edge. Edge delivers integrated, high-precision risk and price data for any application with a market. After 2 months of securing Jupiter, Edge has already secured $30 billion in volume and more than 60% of all Solana perps volume. Edge is comprised of 3 components: high-precision price data with an integrated risk engine, automated delivery of real-time parameter adjustments on-chain, and secure delivery of custom data points via zero-knowledge proofs. Follow and reach out to Chaos Labs on X to learn more. Thanks again to Chaos Labs for sponsoring today's episode. Quick shout out to the sponsors of today's episode, Glif. Glif is Filecoin's foundational DeFi primitive, enabling Filecoin holders to earn rewards on their Phil tokens by lending them to a diverse pool of Filecoin miners. Similar to LSTs like Lido or Jito, Glif solves a major capital inefficiency for Filecoin. Glif currently has over 19 million Phil deposited and over 150 million Phil in total volume, and is backed by the Filecoin Foundation, Multicoin Capital, and more. Got Phil? Deposit it with Filecoin's first and most popular DeFi protocol by visiting glyph.io today. Thanks again to Glif for sponsoring today's episode.
Looking at Twitter and looking at Telegram all the time, this is something I struggle with. How do you guys avoid noise in the markets and really just focus on your own?
That's a good question. I think I adopted other people's views and lost enough money to realize that you can't borrow conviction. You have to make your own conviction, or you have to have absolute conviction in certain people. Roland is actually one of those people. Every so often, Roland sends me a contract address, and I have such conviction in Roland that I will always look deeply into it. And I'd say like 20-30% of the time, I'm like, this guy's a genius. Like he's like the they have those pigs or those dogs that like smell out those prize winning truffles. Like that is Roland in the trenches. But it's a feedback loop, because the more you stop listening to everybody and the more you start listening to yourself and doing the work and building conviction and finding a few other people who tend to be right often, the more your luck turns around, and the more you find yourself being on the lucky end of news and events, and the more you find yourself winning. And then it's like really easy, because it's like, oh man, like all I have to do is keep thinking for myself and I make money. And every time I don't think for myself, I lose money. And I'm just going to I want to keep winning. That's the only way to do it. And like mute every single chat and close Telegram throughout the day. Like there's just no need to have it always open unless like it's part of your work.
I think that's easy for people like Matt and I to say in hindsight, because we have lost plenty of money on borrowed conviction. But in terms of actionable things that one should do, I think that the ability to grow and grow conviction and create a thesis is by experience. So I guess keep on clicking, don't stop, never die, and in that way you will be able to gain experience, and you will be able to see what you did wrong and right. And I think that maybe having like a journal or something can definitely help in terms of you writing down the things that you did that led you to the right path, and the things that you did that led you to the wrong path. I've never really had a journal, to be honest, but I think that it's good for many people. I just I guess I do these things in a more informal way. I just think about my trades once in a while and what I do right, and that I should do more of. For example, my perp trading was too stressful for me, so I decided to cut that, and I just focused on midterm and long-term stuff. So I guess you have to find whatever fits for you, and then based on that, you're going to be able to get experience and then be able to have your own conviction.
That makes sense. Journal thing is something I hear a lot, actually. Avi talks about it quite a bit on Files Index as well. He's like, you should keep a journal. We talked a bit about flows and capital moving into specific sectors. Where do you guys see the money going? And just to add on to that, is there anything specific that you guys are excited about, sectors that maybe the market isn't going to move in the near term, but you think it's the killer use case for crypto? And Matt, I assume I already kind of know your answer, but maybe you want to kick it off.
No, I want to hear. Roland is way more qualified to answer this than I am, so I want to hear his answer first.
Killer app in crypto. Well, I think I would want to divide this into, let's say, 2 different phases. I'm not sure when phase 1 evolves into phase 2, but we're definitely in phase 1, and phase 1 is speculation. Speculation is the driver of attention and the driver of usage in crypto. And this is not me being salty. This is me looking at the numbers. Look at the numbers of users on, let's say, Pump Fun, Moonshot. Look at the rankings or the increase in rankings of Phantom and of other, let's say, trading related protocols or apps and compare them to traditional ways of investing like Robinhood and Coinbase. People want to have opportunity to win, and crypto offers that, especially in bull markets. And I think that in time, as we onboard more and more people, crypto will kind of interlink with many of the other apps, many AI protocols or AI TradFi related startups, and crypto in itself will become kind of the base layer of future of the way we interact with the world in the future, just because of its verifiability. It can be payments, it can be via AI protocols, it can be via DeepIn, it can be a number of things. But I think that in a similar way how Bitcoin has evolved and has shape shifted like a chameleon along the years, I think that crypto killer use case also will change. And I don't think speculation in itself is able to bring 1 billion users. I think that don't quote me on this, but I think the global market in terms of active gamblers is around like 1.5, 1.6 billion monthly gamblers, and it's very hard to onboard them because crypto doesn't have the same distribution channels as a cash cow gambling company does. So I don't think that's the killer use case. I just think it's a use case for now to onboard users, and then it will evolve in the future.
I don't want to get like too zoomed in, so I'm going to zoom way out. I just finished Yuval Harari's latest book, Nexus, and if you've like listened to any of the intuition spaces, I plugged it a bunch. Yuval, if you're hearing this, or if somebody knows Yuval, I keep plugging your book. Reach out. Let's discuss some tokenomics. But he has this really amazing idea where like there's 2 extreme forces, and he's thinking about it specifically, I think, like in terms of like information, but that also is kind of synonymous with governance in a certain way, where you have extreme totalitarianism and then you have like extreme decentralization, democratization. And I think those forces will continue, period. And I think the natural reaction to any type of extreme totalitarianism is extreme decentralization. So like I think there's a force pushing towards decentralized computational systems. And I think any democratized political system must verify its democratization, therefore must adopt decentralized rails eventually. So you have like both forces unknowingly pushing towards decentralized democratized systems. So I do think that blockchain technology is inevitable. And that's why I've dedicated, this many years to it. With that said, the AI blockchain intersection can't be understated. And it's also a huge curveball in how we've been thinking about the killer use case. So I think on one hand, you have things like decentralized social media, you have things like decentralized news, you have things like decentralized databases, decentralized indexing, decentralized VPNs, etc. And like those are just new ways to solve existing problems, essentially. But then you have this entire AI layer on top. So to ask what the killer use case is to know exactly what the world looks like 10 years from now. And quite frankly, I don't know if we have like AI overlords. And if we do, I open you with welcome arms. And if we don't, then the impact AI is having on the killer use case is probably way less than we thought. And who knows, maybe there's like a humankind revolution where like all the global governments all decide at once to like hold AI back or something. Who knows, right? Like anything's really truly possible. But as Roland said, like we're starting to see early adoption, and I think this is the last pre-product market fit cycle. I think what we see 3-5+ years from now is going to look much more like the early 2000s, where like applications come roaring forward because they are having meteoric rises with users. So I think like the fact that no one's really paying attention to applications right now, and the fact that no one's really paying attention to like the core tech protocols right now, tells me that they're probably in their like last like forgotten cycle or something, right? Like things swing, the pendulum swings. So the fact that nobody's really talking about that stuff tells me that that's going to become a really big deal over what I would consider to be a medium to long-term horizon. I don't really remember exactly the question you asked, but I think that kind of answered it.
That was perfect. It went somewhere much more interesting because now I get to ask about. You guys both mentioned that the market is now maturing. Roland, you brought up that now we're doing financial stuff. Matt, you said that this is the last like pre-adoption cycle. Will you guys? Well, you guys will be able to keep up, but will I be able to keep up versus the new TradFi incumbents? How do you think the market shifts? I guess like after this cycle, do you think we go full? Because like you guys mentioned, Pump Fun I think made. Let me pull this up. They're making money. Like protocols are now making money.
I think they have 300 million in Sol sitting, or they just sold it. I forget. Yeah,
it's like they make money. So I mean, we said price leads narrative, narrative leads price. Will narratives even matter coming up? This like later this cycle, next cycle. What do we think?
Yeah, narrative matters always, right? Tesla is not just a car company, right? Narrative always matters. We won't keep up. I mean, 2020 and beyond already could, like, you used to be able to be a generalist in crypto. Like 2016 through early 2020, you could be on top of the pulse of everything. People were like pseudo intellectuals in like 12 different topics. And then 2020 came and it actually became impossible. And every VC that I knew started bringing on more analysts. People started specializing. Gaming got its own specialization. Layer 1 got its own specialization. Layer 2's got their own specialization. The application layer got its own specialization. And that was so I already can't keep up. And being on the building side of things, like people in crypto Twitter and people speculating on tokens don't even know about 2/3 to 3/4 of the things in crypto. Like the types of tech that we adopt that isn't even tokenized, but that's decentralized, that like we're using, and like all sorts of, like, people just completely underestimate how big the space is from a technological standpoint. And they get so zoomed in on like what you can speculate on today or what the flavor of the month is. Or like, I mean, listen, people are so zoomed in that they're like, oh, AI memes are out. Now we're on TikTok memes. And like the whole complex collapses. And they're like, oh, it's all over. And it's like, oh, you have no idea that 3/4 of the technology that's being used on these things that you're even logging into daily, like doesn't even have a token, right? So no, we won't be able to keep up. Yes, narratives will still matter. And I think like crypto succeeds when it doesn't feel like it's crypto anymore, right? When you just swipe up, log in, and go about your day.
Anything you want to add, Roland?
I think that Matt said that price creates narrative, or price leads narrative, and I think that is true to some extent. But I think narrative has to be very carefully created and very carefully manufactured, especially if you are trying to lead a narrative or create a new narrative. It doesn't just come up. So I think to some point they work hand in hand, and a mechanism. This is something that we focus on using our experience and of course our reach to help protocols create their narrative. And if you don't carefully shape your narrative and aren't able to communicate it well and distribute it in a way that appeals to people, then your narrative is inexistent. And you cannot have even price leads narrative because there is no narrative. There is no narrative to be created. So you have to very carefully think about creating your narrative, either as a protocol or as an investor. You want to be able to sniff out and figure out narratives before they happen or in their first inning, because otherwise you're too late.
That makes sense. Matt, maybe a question more directed at you. We already talked about how you moved on from the investment side to the building side and that you enjoy it. Is there anything that you don't enjoy being on the building side? And is there, my view is that, and this might just be because on CT you see a lot of people complaining, but sometimes protocol founders complain. They're like, oh, like meme coins are getting all this attention. We're not getting that attention. Is that something that you felt? And if it's not something that you felt, why do you think that is? What have you guys done the correct way?
That's a really good question. I think if you're not getting attention, trying to point to the thing that is getting attention and chopping down at it is like literally the worst thing you can do, and is like a bearish signal, because I see that and I go, interesting problem for us to overcome. Let's think creatively. Where is the intersection of our product and attention? And if there is no intersection of the product and attention, then what core fundamental problem are we solving? And how do we find those people who have that problem? And if you can't come up to an answer to either of those things, you're just building a hobby. Straight up, right? Like if you're not solving a problem, and if you're not able to garner any attention, then you're probably just building something too niche for mass appeal, and your expectations are misaligned with reality. The building side of things, there's nothing I really dislike about it, quite frankly. Like every day you get to wake up and deal with people, and the biggest challenge is existing within the boom bust cycle of crypto, I would say, right? Because every 12 months, you're trying to build highly scalable, crypto economic, feedback looped, well architected, decentralized systems. In our case, around information, knowledge, and social connection, both of humans and non-humans, right? AI agents can be part of this easily. Nobody knows how to solve that problem. Like, right? Like you're pioneering, like everything we touch, we're at the breaking point of it. So like we're adopting a technology, they spin out an update. 4 weeks later, it's a breaking change. We have to fix it. 4 weeks later, it's a breaking change. We have to fix it. We can't just go to like Google and ask like why things aren't working. Like there's nobody who's solving these problems. Like that's so exhilarating. That's so pioneering. That like is a great reason to get out of bed every day. But that's a really huge challenge. And then you have to figure out how to do that through bear market cycles, early bull cycles, peak euphoric bull cycles. So like the line isn't here. It's not like the line isn't straight uphill Everest. Like you are literally zigzagging up Mount Everest, right? Like, oh, it's a bear cycle. Like, let's get down and like really communicate all of our fundamentals and like go find the other really high signal builders and like ask them what their problems are and like use them for market research. And it's like, oh, it's an early bull cycle. It's only crypto natives who survive. Like the point farming meta is big. Like, let's go get to them. It's like, oh man, it's like mid bull euphoria. AI and memes are the thing. Like, how can we demonstrate our market to this current market participant? And then eventually the market tops, right? It's like, oh, everyone's running away. Like what core functionality that nobody's going to care about because it's like foundational and no one's going to touch because it's so abstracted away. Like, do we need, like, where's our tech debt? Like, what do we need to do? So like the fact that you have to keep zigging and zagging and zigging and zagging instead of just like trying to hit that North Star is the biggest challenge. But like, I think that's super exciting. Like, I can't imagine getting out of bed every day and like not solving a problem I care deeply about. Like, that's just, man, like that just gets my blood going.
That's fair. And it's a good point. And I honestly feel for you guys because even AI agent stuff, thinking about it like 4 or 5 months back, it was a completely different place than it is right now. Like the growth of new tech is exponential. And I think we both like underestimate and overestimate how quickly it's going to come. That it must be like full of surprises constantly. You mentioned that. Well, you mentioned bull cycles, and like being mid and early. And this is actually not for the podcast, but for my own knowledge. Where do you guys think we are right now? What I want to say, what inning, but I'm not American, so I don't know what that even means. But what stage are we at? And do we even have stages, or is it the super cycle real this time?
Roland, where are we at?
I think that in the past you had Bitcoin and altcoins participating in the same cycle and them having bull and bear markets at the same amount of time, at the same periods of time. I don't think that will be necessarily the case anymore. I think that Bitcoin has separated away from altcoins. And although it will lead the way, I do not think that Bitcoin will have another 80% drawdown. I generally don't think it will. But I do think at some point we will be able to capture all the speculative money in the space, at which point everyone has bought meme coins, Ripple, Cardano, and whatever the retail people like buying. And at that point, there's only one place to go, and that place is down. And altcoins will go down 80, 90, 95%, 98%. And in regards to where we are in the cycle, I have a pretty firm belief that, and we'll see how this plays out. It'll be interesting to see maybe 2 years from now. I'm pretty firm belief that most of the previous cycles have been identical in terms of timing. That every single time someone tells me this May is different, this summer is different, this December is different, they have only been wrong. Crypto cycles tend to have a two-wave up kind of momentum in which they tend to either top in April or November, December. So I would be cautious going forward, March, April, and then also cautious towards the end of next year. So I think that we have, yeah, it depends how you look at it. We may have a double top next year, April and November. It's just me basically guessing based on my belief, but I just think that at least until March we're good, and I'll be cautious in the summer. And
Yeah.
I wouldn't believe in any super cycle for any altcoin, for any agent coin, for any other meme coin that has been promoted that it's a long-term hold. That nothing is a long-term hold in short-term meme coins. So I would say long-term is 6 months. That's very long-term. But however, like every single cycle, you have new assets that become like long-term holds. Bitcoin, ETH. Now I think Solana is becoming one as well, and these are assets that you can hold for a very long period of time.
I keep accidentally cutting you off, so I'm making sure that you're good. Mute it for sure. What's kind of scary is that like I'm thinking about it in a very different way, but I think it kind of triangulates with what Roland's saying. If we look at the traditional cycle, it's like Q3, Q4 next year, we top like going back to like the FTX bottom. I was like, next cycle we top around 200K plus or minus 15%. Just like don't overthink it. Draw some lines on the chart. It's going to go there. Like you'll probably trip up and talk yourself out of it along the way. And like hearing everybody be like, oh, 100, 120, like we're not going higher. I'm like, what that? Like in what world that I live in, like is Bitcoin not going higher with like everything happening? Like literally get a grip. Now with that said, I think that the Trump catalyst was a very real catalyst. And come mid-January, a lot of uncertainty returns around the Trump administration. Like there's just so many questions to be answered about how this administration is going to execute, if Congress is going to play along with them, and markets don't like uncertainty. In addition to that, I think like in Q2, Q3 next year, there's really real US recession risk. Like anyone who tells you otherwise, like either has just very high conviction in certain dynamics, but even them, I think will kind of agree that like come Q2, come Q3, some of those liquidity dynamics could be kind of backing off, like the drawdown of the TGA, the hiking of the US debt ceiling. Like we kind of have to go through that period again, right? That's always a rocky period for crypto every single time. And I think that we could see Q2, Q3 recession risk. And one of the potential outcomes of a recession is that, well, first, all risk assets go 1-to-1 and nuke. I don't think Bitcoin nukes 80%, but like, let's say we're at 150, like, could we come back to, 120, 100, 90K for sure? Why not? Right. And that wick can be gone in a week, right? And we could be back at 100K. Like, it moves so fast. But then we might stay there for 3 months, 4 months, 5 months, whatever. But if we go back to a regime where they start decreasing rates and increasing liquidity, and Donald Trump is not one to let the pain get squeezed out of the U.S. economy. He's one to kind of pick it up, get it going, and sort of like let the machine carry on. I could see the potential narrative for a super cycle and above 100 and a blowing past 200K run, because then what happens is we already have a lot of stressed metrics across like the economic global sovereign playing field, and we're cutting rates down again, and we're adding more liquidity again on top of all the stuff that we did from 2020 to 2024, on top of all the stuff that happened post 08. And like, then you kind of have to ask yourself, like, oh my gosh, like, is the US bond market default risk priced correctly, right? Because US Treasury market default risk priced correctly, like, what's going to happen to US commercial real estate? Like, this isn't good. And then you kind of have to look at like all the other global players and be like, oh man, like, they're even worse off. And then if you kind of already have some sovereigns starting to buy crypto, or like maybe they just start allocating during a period like this when their like fiat reserves and their bond holdings like are kind of a bit shaky and people are losing confidence in those balance sheets, then like, yeah, I kind of always thought we could have some type of really, like, the joke has always been like, the top is when we sell to the sovereigns. So like, what is the path to sell to the sovereigns? It's not like month one of the Trump administration, we're like, Bitcoin reserve, we're putting $2 trillion into Bitcoin. Like, no, that's not going to happen that way, but it can happen out of like a shock or a recession. So all that is to say, I think a lot of smart people, and you'll probably start to hear this echo more and more and more closer to the inauguration. And I bet you we're going to be like peak bullishness going into the inauguration, and people are going to be like, oh no, we're way too bullish to like pull back around the inauguration. And we will, because there'll be a period of uncertainty. And then I'm pretty much watching economic data really closely between like Jan 20th and through Q2, Q3, and just kind of like having some cash, having some cash, having some cash, having some cash. Yeah, I feel like I just talked a lot and kind of in a bit of a circle, but that's how I'm thinking about the cycle at the moment. What do you think, Roland? I saw you on mute.
Yeah, Roland, what are you going to say?
Yeah, I mean, I think macro data is extremely valuable at inflection point. And I think Matt has done extremely well to identify what those inflection points may be. But focusing on monthly data on the daily or weekly level will just waste your time. On most cases, if you're a PhD in economics, maybe that's useful for you, but I think that even then you risk losing money. I just think that it's more important to focus on what we have and spend as much time possible extracting as much juice from the bull market, and then be able to either identify for yourself inflection points in macro data or find yourself a Matt. I found myself a Matt, so I have the easy way out. I can just message him.
My favorite thing to say is macro isn't even astrology for men, because at least astrology is grounded in thousands of years of passed down wisdom. Like, it's, you will lose money betting on macro. All you have to do with macro is react after the catalyst. That's it. Like, when a macro trend changes, it changes for months. So like, even if you're 2 to 4 weeks late to like the shift, just trade with the shift. And as Roland said, like, all I'm talking about is I'm open-minded to a recession in Q2, Q3. I'm not shorting crypto, no way. But like, if I see that in Q2, Q3 after being ready for it 6 months prior, like, I'll be really quick to react.
Yeah, and also like during panic moments, even risk-off assets react violently to the downside. There is no risk off during a moment where everyone is seeking collateral for whatever positions. They just sell everything, everything that's liquid, and that includes Bitcoin and gold as well.
That's a good point. Yeah, I guess I gotta shift my mental models a little bit. I was firmly in the camp that of what Roland said, relax until March and then consider some stuff. But I guess going into Jan, I need to start. I like you said, Roland, I hate, and like you said as well, Matt. First of all, I'm not smart enough to understand macro stuff. So I just generally avoid it. And if Matt writes something in chat and says, "Hey guys, maybe be a little bit careful," then I'll pay attention. Or like Bingoto's perpetually bearish, but like if he says something, I'll pay attention. But apart from that, I tend to ignore it. But this is maybe Matt, we can have you on. Roland, you can come as well to laud if you're correct in January and see if we're gonna go down or not.
It won't be a big one. It'll just have a lot of uncertainty. Like we're not going to nuke in Jan 20th, but like
I mean, I think
I guess
Jan
is 10% is 10% a nuke?
I
Let me
mean,
ask that.
I think Matt is talking of having like a 10% drawdown, like a 2-week drawdown in Jan. I don't think he's talking about an end of the world kind of scenario where your altcoins go down 90% and your goat is essentially worthless.
Yeah, that's fair. Guys, thanks for coming on. Before I let you go, do you want to shill anything? The last 3 minutes is just you saying, go to this website, do this, do that, read about us X here. Anything you guys want to share with my dear listeners?
I like how we both stayed muted. That's so dangerous. Man, I have to think. Okay, I'll tell you one thing that caught my eye. I'll tell you two things that caught my eye. On the 1000X podcast, Avi shouted out a coin called Geeko, which is the first cat meme on the internet. I think it's the best risk reward in crypto memes. Like it's the easiest play with it has the most ravenous community I've seen since Mog. It has the most diamond-handed meme holders I've seen since Mog, pretty much. The rest of the market pulls back, it just goes sideways. And I just think it's a matter of time until that thing just absolutely rips. And then when it's ripping and everyone's piling in a momentum, and then they're all just being like, it's the first cat meme on the internet, it immediately puts it in the category of like a Doge or a Pepe. So I'm just like, that thing is my like cycle bag, bought some, talked to some smart friends, and like I have very very high conviction on. The second one came about recently. I have a buddy. I would love to shout him out, but he would be super mad if I did. And he's like super deep in the AI trenches. And I was on a call with him, and he was showing me everything. He was like, "Oh yeah, like Aliza, AI 16, Fartcoin, this. And I was like, "Whoa, I just got a crash course in an hour." And I started scrolling through a bunch of these coins, and I was like, "These are really cool," but it's just spewing content at me. Like I kind of got bored. Like I kind of get bored of the timelines of just content. And like it doesn't interact with me. And I kind of think that like you want to be long community and you want to be like long that community's vibe and culture. And it doesn't feel real in a certain sense. And then I was in a group chat and somebody started talking about AI swarms, and they shared 4 projects. One was like SLZ or something, Project 89, Wibwob, and Sid. And I checked out each of those. And this was like November 18th or November 19th. And the Wibwob project had just released this AI generated video of the past 27 days of its life in art form. And I was like, whoa, this is super cool. Like this, like, what is it building? And I spent like 30 minutes at most just scrolling its feed and like reading all of this ASIC art. So first of all, I think ASIC art, or I'm pronouncing that incorrectly because they ASCII, whatever, ASCII, is like back in vogue. So like that was super cool to see. And then I started like reading and paying closer attention to it, and I was like, oh, holy shit, like this thing's like doing something. And then I found the founders page, and it's these 2 AI agents building a video game. And I was like, whoa, this is cool. Like this is cool. Like this has, you have my attention. So that's something I've been looking closer and closer into. And like those are the 2 things in the trenches that I am interested in, and I feel like I've been gaining some mind share. But like that's really contrarian from everything else that I'm hearing shilled by everyone all the time. And like I said earlier, like I want to do the opposite of what everyone's doing if things become saturated, and I want to build my own conviction on like my own thesis. And I think that's really important in crypto. But Roland, what are your picks? And I'm going to write these down, whatever he says.
Yeah, I've actually seen Geeko Matt, and the fact that I don't know, I think Binance Futures posted about it a couple times. That was quite interesting. Oftentimes my bags align with Matt's bag, so there's no way to show my bags because Matt already has. But I would say from a
Wait,
longer term point,
are you in? What are you in? I know you're in Geeko.
I
Are you
should,
in? Uh-huh. I guess you don't have to dox. It's okay.
yeah, I don't want to dox my wallets. Um, but I think like the way that I think that, okay, to put it bluntly, memes go higher as a niche. Um, Currently, we have the biggest overlap between market participants and memes. So we have institutional money or funds that maybe 1 year ago would have said, no, I'm not touching these things, that now are opening up to touch memes. Every single allocator, liquid investor, liquid fund investor, institutional investor is interested in memes and is actively allocating from 1% to whatever percent they're comfortable with. You have smart money that has always been active in memes, and you have retail that is only active in memes. So I'm not surprised when the volume of like Pepe or WIF is larger than many other large caps, because this is what the people want. And if this is what the people want, we should give them what they want. And what we want and I want is the number go up, and I think it will go up. And like, what is Dodge now? Maybe like 70 billion, maybe it touched 80 billion. That is a crazy valuation. And in the last bull market, we had Dodge touch 60 billion, Shiba touched 40 billion. So if you think your meme coin will only touch 1 2 billion, you have to dream bigger, especially if it's listed on all of these tier 1 exchanges, which not many are. But the conclusion is that you have to dream bigger. The biggest mistake in a bear market is to buy too early. The biggest mistake in a bull market is to sell too early. And that's it on memes. I think that like the recent listings of Pepe and WIF on Coinbase and Robinhood are huge, because there is a certain amount of institutional capital in the US that is unable to access other platforms like Binance or OKX or any other non-US exchanges. So I think that is a paradigm shift. Although price action has been disappointing in the last couple of days, now we're late November. I'm not sure when this will be published. Hopefully, my bags will be higher than now. And another thing that I want to point out that another thing that I want to point out is actually a portfolio of ours, which is Nectar AI, which is very interesting thing that not many funds, um, let's say, were able to touch back then, but now they're all interested in, which is AI companionship. The World Health Organization actually declared loneliness as being one of the largest epidemics globally. There is a trend for people to spend more time inside in computers like us right now, and then they get lonely. And I think that AI companionship is able to bring something on chain that we haven't had on chain. On chain, we've only had users that are driven by financialization, which comes by swapping, by yield, by speculation. But once you bring emotion on chain, then you're actually potentially able to break what I call the adoption dilemma. And I think that AI can definitely help with this. And having an AI companion on chain all the time is just the beginning of a future that we may not necessarily be prepared for, but it's coming either way. And we just have to think ahead and prepare for it. I think that, yeah, you guys definitely check out Nectar AI.
Wait, but
I want to
Kasia,
double.
oh, sorry. I know we have to end, but before we end, I have a suggestion, but I don't want to cut you off.
Let me know. Go on.
Go.
Well,
I
okay,
want
I'll
to
go.
hear you.
Roland, you can shut this down, but like, yeah, I think it'd be really cool for us to kind of go back and forth. Like, I didn't realize that you were kind of looking at these AI swarm tokens too. And like I don't know if everybody kind of like knows or thinks about like how other people think about assessing these early narratives and this early narrative creation. So like I'm actually super genuinely curious what you've looked at and what you're thinking about them, and then we can kind of compare notes. We can time box it to like 3 minutes, Boccaccio, so you don't get in trouble, and we can like kind of pull the veil back a bit. But that's only if everyone's on board.
Yeah, I think that generally speaking, so like for example, right now I quite like Blob, for example, and I just want to like share more about my thought process. So I think I mean I analyze these tokens like DeFi tokens, even more than DeFi tokens. I think they're DeFi tokens with a cult leader. The cult leader is the dev, and DeFi tokens, the dev may not be known or maybe anonymous. So a couple of things that I look at, I try to get in these tokens sub 20 mil, just because I want them to have a big enough upside that is asymmetric for me enough to get in and to be able to have like a 10 20x in them. I'm not interested if a token is like 500 mil. It's just not it for me, because many on-chain tokens tend to top at 1 billion market cap, and are unable to go higher without a significant tier 1 sex listing. With that being said, the way that I look at these tokens and create a mental model is that I look at the dev, what's his tone, how capable is he to push this forward, how motivated is he to push this forward. I don't care if he's in on or not. You can read it, you can kind of be able to visualize their tone and how consecutive they are with their developments. I think that as important as the AI itself is, the dev is in terms of his posts on Twitter. Then you have to compare the tech and the vibes. I think that people discount vibes, but vibes are very important. The vibes have to be immaculate for the AI token and also for the community. And you have to make sure that the content is engaging, because what this at this point in time, these AI meme coin agents are a engagement farm protocol or attention farm protocol. So you have to make sure it appeals to the audience and it's competitive, because it's an extremely mercenary field, and if it's not competitive, something else will be competitive the next day and you're going to lose. So it has to be innovative. If you're able to scan the code, which I'm not, but I have a couple of friends that are able to, you should be able to assess whether it's more advanced than other AIs and assess the capabilities of the dev. Then you have to look at things that you would look at other meme coins as well, such as holder distribution. Is it a cabal? Is it a CTO? What is the percentage held by the top 10, top 5, top 100, whatnot? You have to look at the volume. And I like, for example, like when I got into Blob, it had $110 million volume with a $6 million market cap. And just by looking at that, I was like, what's going on here? Is this fake? Is this spoofed? But actually, it was not. Just lots of people trading it, which lots of people trading it means lots of attention, which lots of attention does not equal $6 million market cap. Lots of attention equals, I don't know, gold going to $1 billion. That's lots of attention. So there was a mismatch. So I tried looking at mismatches between different fundamental things that I look at and valuations.
Yeah, I think that mismatch point nails it. I was hoping you were going to give me alpha on which AI swarm to build positions in, but I appreciate that framework.
Wibwob is the one I like most, but I haven't really looked into all of them into so much detail. And we do have a big risk of listening to this 1 year from now and sounding like complete, I won't say it.
Like bull cycle mania.
But there's also a chance that you'll listen to this 1 year from now and say, wow, I was fucking early to the narrative. Maybe not Wibwob, but
if they go up 1000x, I'm not listening to this no more. I'll be chilling.
Thank you very much for that.
Yeah, no, I'm just joking. But I think that like all the tokens discussed by myself and Mark are very experimental, and everyone should look into them. No way, shape, or form it's investment advice. But we're just sharing what we think.
Disclaimer at the start, man. You don't need. I promise. We have 3 disclaimers before this.
No, this was not meant for the audience. It was meant for you, Boccaccio.
Yeah, that's who we were worried about.
Otherwise, you're gonna end the podcast and gonna buy all our tokens. Which I mean,
I'm looking at the chart right now, and it's green. It has to be you. No one else is listening.
I think it's DCAing in.
I set up a Yeah, let's reiterate that. That was, for what it's worth, I think AI agent stuff is like the meme coins. I heard a lot of smart people, and you guys are just adding confidence to it, just saying that this isn't just regular meme coins. It's actually something like a slight shift in attention and like sectors. So I find it really interesting. I'm not in WibWob. And for my listeners, please make sure to do your own research. Nothing is financial advice, but this stuff is really interesting. Guys, thank you for coming on. Yeah, that's it. Thank you guys for coming on. This was a fantastic episode. I had a lot of fun.
Thanks for having us. This was awesome.
Thanks again to Skale for sponsoring today's episode. If you weren't already planning to, make sure to go check out Skale's ecosystem. Explore the gas-free ecosystem at scale.space/ecosystem and follow their journey on X at Skale Network. And visit the Skale Research Hub to learn more about the gas-free architecture and growth of the ecosystem. That's scale.space/research.